Hi, everyone. As we are waiting for people to join, give us a few minutes and then we'll get started with this webinar. All right, let's get started first. A lot of you guys are already here, and I think more people will join as we go. But for the sake of time, we're just going to get started first. We have some guests today. I'll make the introduction. Shortly. But let me run you guys through the agenda for today. This webinar is a bit broader than usual. We have a lot of different people from a lot of different countries joining. So I do a quick update on the HH just to make sure that everybody's sort of familiar with what we're trying to do. I don't want to use it. I don't want to talk too much about us, so I'll keep that short. And then we'll talk about Mohan, who's our guest today. With Mohan, we're going to do a panel discussion today, very, very much focused on Southeast Asia today. So, for those of you that are trying to learn something about this landscape and what it is to be an angel or venture investor, this should be an interesting webinar, hopefully. And then, we'll do a Q&A. Feel free to ask questions. I'm going to have just a conversation with Mohan, but if you feel like you want to ask something, feel free to use the chat or the Q&A function and see where the conversation goes, and then we'll close it off. Try to keep it under 1 hour as usual, just to keep it interesting for everyone. Okay, real quick on HH, where do we stand? HH Investments, as you guys, most of you know, we're a venture capital arm of our single family office. Headquartered in Singapore. Basically, we have entrepreneurial background. We've been operationally active in different countries and different companies, and we're using that experience to invest in companies, and hopefully we can actually contribute to these founders. So our mission is really to provide smart finance, as we call that, right? So we try to add your knowledge and your experience to support founders with a global vision that solve meaningful problems. Well, we can have whole discussion on what meaningful means, but we'd like to keep it a little bit broad. But we like Southeast Asia a lot. That has a lot to do with the fact that we're here in Singapore and look at the region, and we really want to focus on this region, even though we venture out from time to time. So again, today we're going to talk more about Southeast Asia. Some of the companies that we've invested in. Again, most of them are Southeast Asian companies. Some of them have, a broader scope, meaning they are maybe their headquarters is in Singapore, but they're actually selling globally. Others are actually very, very much locally focused on the local market. And then we have sometimes companies who are actually completely outside of Southeast Asia. For example, eJust here at the right side of your screen, which is obviously it's a bit of a later stage companies, but again they are also selling products here in Southeast Asia. So we also like to have that link with the region. So we're actively investing, and we always invite accredited investors to join us in all kinds of shapes and forms. So we're always open to that. We invest in companies, I'd say from all the way from pre-series A to pre-series D. Or to Series D, excuse me, because we see opportunities everywhere. and we really think it's about finding the right founders and the right teams. Even though 80 or 90% of our portfolio is really sort of on the early stages where people are just getting some traction and try to get help. So we've invested slightly over $10 million in the region in around 10 different companies. And we see, an IRR of 25% and a multiple of 3. So obviously there's a lot of, paper valuations in this, and there's no, large exits yet, but it's looking quite promising. And so we remain to be very excited about this region. And let's see if our guest today is also excited about this region. He's been here much longer than I have. Mohan is Singaporean. Mohan is the let me just introduce him, and then he can talk a bit more about himself later. But Mohan is the founder of, or co-founder of E27. E27 it's a go-to platform for insights, connections, talent, funding opportunities, basically across the region. So they're very active in from a lot of different angles. You might have seen them as a news platform. I don't know if I'm offending you if I say that, Mohan, but feel free to correct me later on. He's also Mohan is also an angel investor, so a lot to share with him on companies and insights. He's been doing over 16. He has over 16 investments, Southeast Asia, India, US, and New Zealand. So this guy has a wealth of knowledge on the region, and we're hoping to extract some of that wealth of knowledge today. Real quick, why Southeast Asia? Well, there's a few reasons where we like Southeast Asia. Obviously, Southeast Asia is home to 4 of the 7 highest performing emerging economies. Meaning their GDP has been growing for the past, I think, 30 years. Indonesia, Malaysia, Singapore, and Thailand. I think Vietnam can sort of be added to that list. Southeast Asia has more than 360 million internet users, and that's still growing. And then the third point, and that's actually one of the most important ones that we always see, is that consumers are simply starting to earn more money in this region. People have a higher spending power. And that means that the demand for consumer products is increasing. And the last point, we see a lot of ingredients for success. There's follow-on funding, sufficient talent, and opportunities to exit. I think we can have a debate about this, and we will shortly, because there's a lot to say about whether there's always these right ingredients present. But from a high level, and then our thesis would be, and then we get to this discussion. Venture investing is really about, in Southeast Asia, is really about finding solutions and technology from other markets, developed markets, and basically, changing them, adjust them, and launch them in these developing markets. This is a thesis with a big question mark. So this is not necessarily my opinion, but I wanted to sort of state this out today and see if we can get an answer to this. See what our experience tells us. So without further ado, Mohan, maybe just a quick introduction from yourself, just a few minutes, so we all know who you are, and
Yeah. Thanks, Maarten. Very good to meet everyone. And looking forward to a very exciting discussion, right? So, I was born in Singapore. I spent a bit of time in the US, part of the NUS Overseas College Program, which is a program that the local university runs that actually contributes to about 30% of the founders in Singapore. So looking at that, looking at the culture and the ecosystem activities in the US, brought that back here, and that's really how E27 was initially started. Like what Maarten said, right? We are well known for the news part. We also used to do the largest tech conference in this region called Echelon. But a lot of what we do now is really matchmaking activities between startups, corporates, and investors. We used to do that a lot offline, but thanks to COVID, we've now been able to bring it online. And then my angel investment journey started in around 2013, when I first started investing in early stage funds. So Golden Gate Ventures was the first one. And then I started investing in early stage companies. And then now that has spread out to a bit in the US, markets like New Zealand and Southeast Asia. So really excited to be here to share.
Fantastic, thank you. So you've been investing for almost 8 years, and so that's about the time we should see some exits, or that we should get to the end of the journey for certain companies. What has been your sort of greatest investment till date?
So I've already had a couple of exits, right? The first one being the Golden Gate Ventures exit, which was done to a larger fund, in this region. Most of my investments so far have been multiple follow-on investments. So usually I'm either in the first check or like the pre-seed level, and some of these have gone on to raise multiple levels of post-funding. So there's a company called G Life, for example, which is in the food to table model. Went in at the pre-seed level, and then now they just closed the unannounced $5 million Series A round led by Heliconia, which is a subsidiary of Temasek.
Temasek, right? Yeah.
Interestingly, in the later part of my investment journey, a lot of the investments have been towards the US side. So there's an early stage fund called Kearney Jackson that I invested in, and they've invested in multiple companies that have had follow-on funding from Andreessen Horowitz,
right,
and the likes. And the most recent success, I believe, is a company called BetterHalf.ai, which is an AI platform to help people get married. Went in at the pre-seed level, and they should be closing a 30 mil Series A within the next 6 to 12 months. They just the YC program and all that.
Just curious on your fund strategy here. Being an angel investor, you see people, typically just looking for companies to invest in. You invest in some funds. What's the reason you've invested in funds?
Yeah. So in the early days, when I first started out, my model was to work with the funds, and because they are the ones that are actively managing companies, actively reaching out for deals. Partly it was a way for me to learn how this entire thing works, but it was also a way to manage my own.
Right. Just okay. So basically to get knowledge. Interesting.
Knowledge plus risk.
Right. Cool. Just to get for people in this conference, or to have a bit of an understanding of what you're looking for, like when now you have that knowledge, you've invested in some of these funds.
Yeah.
When you look at companies, let's focus on Southeast Asia. What are you looking for? What are the sort of the criteria that you look at?
It has changed over the last few years, right? In the early days, it was all about finding companies that were disrupting traditional sectors. So a lot of logistics. There was some in e-commerce, but all disrupting traditional sectors. Now it is really on sectors that I feel are impactful and important for us to look at. So I've been looking at the food tech sector. That's why the Just deal for me was very, very interesting. G Life is another example. I've always been focused on the founder mainly. So when I go in, right, it's at a level where the founder is just building the business and just starting it out. So for me, it's all about why is the founder doing it? What kind of background do they have that is going to allow them to be successful with this business?
Yeah.
And the traction that has come from what they've been building. So it's really very founder driven. That's my choice.
Right. I'm with you there. I'm with you. I mean, it's 70% founder and 30% business. But let's look at the external factors, right? So 70% founder. What do you feel is sort of the biggest challenge, when it comes to early stage or your portfolio in this region? What aside from the founder, just the external factors?
Yeah. So COVID was the black swan event, right? So if we look at last year, a lot of the key challenges that my personal portfolio were facing had to do with either completely changing their models. So, for example, one of them had to go from B2B to B2C, right? And that was a radical shift in their operation, their entire business. And not all the investors were on board with the idea, but they really had to do it to get money and cash flow. Another one of them had also to do with fundraising plans. So a lot of early stage investors will support founders up to a level where they're able to do follow-on fundings. And for a lot of the founders, a couple of them, in fact, right, last year that plan completely changed. So the investors were not that supportive of the business anymore. So for them, it was a feeling of like, okay, I need to find a backup group of investors, or I need to put in effort in relationship building with other people that might not necessarily have been my early supporters, right? So I think that kind of psyche was very unique for a couple of my portfolio companies.
Right.
But for some of them, right, it was also dealing with some of the scaling issues. So for one of the businesses that we invested in, having that face-to-face touch point with customers was very critical. So that really affected his business quite a bit. In fact, now he's still traveling the region and doing 2 week lockdowns and quarantines everywhere he goes, right?
Right.
I think has been a challenge for him because
That's why die hard.
so he's very hardcore. He doesn't care, but for him,
Right.
that has been a struggle for COVID. So it's kind of quite varied, partly depending on the industries, but partly also depending on the stages of the companies.
Right, but okay, that's obviously. I mean, I think a lot of businesses struggled last year and are still struggling to find a way. Some of them are flourishing. I mean, you see businesses who are just like sort of booming because of COVID. But looking at the region, maybe out of your investments that you've done in Southeast Asia, what is the biggest mistake you've made? Like something you thought, well, this is going to fly in this region, and it simply doesn't because the limitations that you might run into.
I think regional scaling. So in the early days, a lot of the founders that I invested in were quite bullish on scaling regionally, and they didn't realize how big of a challenge that was and how much money they would need in the process.
Yeah.
So I think for them, it felt very straightforward to maybe just send a general manager equivalent person to a new country, get them to build the team, or maybe just find a partner locally. And it really never works that way, right?
Yeah.
Most of the time, what ends up happening is that if you're Singapore-based, you raise money, there will be multiple competitors that come out in all the regional markets and also raise money, right?
Yeah.
And then that makes scaling extremely challenging. So I think that part has been the biggest misconception and letdown that I felt, and it's very critical for a Singapore-based investor because the local market is just not big enough.
Yeah, I'm with you there. I mean,
very quickly.
Yeah, we get founders all the time who say, "Oh, well, let's launch in Singapore as a hub, and then we'll just go into Southeast Asia from there, right?" And it's just like it doesn't work like that. Yeah, I think that's a big lesson.
The other one is also right that actually all of my early stage investments, the ones that I did pre 2015, all of them ended up doing massive pivots, and in a good way, right? Because most of the time they realized that whatever they were building was just too small, couldn't scale, or they found a better opportunity.
Yeah.
Right?
Let's look at it from the other side, right? Because
that was a challenge I felt.
Yeah, I agree with you, and I've seen that too. Have you seen teams that were able to crack it? That say, look, they may not have the misconception, they actually realize this is difficult, but they managed to crack it. And do you know why? Like, what did they do different then?
So absolutely right. So if I were to share the case study of Bolt Dragon, which is a company I invested in I think 2013 or 2014, right? They started out doing micro logistics, like they would give boxes to like the student market and all that, where you could store stuff in their warehouses and then you could retrieve them anytime you wanted. And there were US-based companies that were doing quite well at that point in time. There were multiple competitors in the space, right? They realized very quickly that it was extremely hard to scale. The market in Singapore was too small. Going overseas was too difficult. They looked at warehousing and all that, and it just didn't work. But then they also realized that one particular sector of their market, which was the doctors and the medical companies, really used their services well and started to have very specific problems. So they did a bit more research to see whether could that sector be a market that they went after. And that's basically what they did. They targeted smaller clinics first, and then they moved this to up to like bigger hospitals. They even do all of Apple's medical facilities in China, for example. So that ended up being probably, I think, a pivot that worked out really, really well. But on hindsight, right, they actually had to build a lot of new things in the process, which meant that if they didn't have the financial runway, right, and the quick expertise to do it, they probably would have run out of cash.
Yeah. I think the lesson we can draw from this is, and we see it in our portfolio, and the lesson is really like, first you need founders to realize that these countries are very different. Like the moment you're not aligned with a founder that says, "Oh, I'm just going to go into Indonesia and then I'm going to do Vietnam," you're probably not going to go anywhere, right? But if you speak to a founder like, okay, and they realize this is difficult, and they start to adjust, their plan on the fact on the information that it's difficult, you might actually get there, right? I mean, it's a matter of planning for the challenge in that sense.
Exactly. I think most of the older founders or those that have been around longer, right, they have a certain sense of humility with respect to expanding into a new market. They know that, okay, for markets like Indonesia, right, you literally have to raise a lot of money and do it yourself, or you have to partner with a local firm, or you have to go for a sliver of the market, right, that is maybe more relevant with your core business and leave the rest for local players. So it's really not a straightforward game.
It can be done, but it's challenging. Yeah, exactly.
Yeah,
okay.
Can be done, yeah, but very challenging.
In terms of the in terms of the capital, you already said, like, when you want to scale across these borders in Southeast Asia, you'll need capital. From your opinion, do you think the capital is available for startups to achieve that?
I think for startups that have a strong initial core business that is doing well locally, and they know very clearly how to replicate regionally, I think there's a decent amount of money available. I think the challenge now is that the money is very available to opportunities in very specific markets. So it's not like in the past where a VC will give you money, right, to expand in Southeast Asia. I don't think it works that way now. I think the VC will give you money to maybe expand in a certain vertical or expand in a certain new market, like maybe Malaysia, Vietnam, or Indonesia. And that too, right? I think it's a city-based tier, not a country-based tier. So even if you expand in Indonesia, it's going to be expanding in Jakarta and maybe the second level city, which is maybe potentially Jogja. Not all across Indonesia, because they understand that it's realistically not possible anymore.
Right.
So I think the capital models have also shifted, or the logic with capital allocation has also shifted, where they know that it's not a straightforward just go to multiple markets and corner it. It doesn't work that way.
Right. Is it getting easier? Like, you've been investing for about 8 years. It's always been a challenge. I mean, of course, there's this misconception that people look at the United States and they say, well, if I start in one city, I can just scale it across. Obviously, here it doesn't work like that. Even from my experience in Europe, it is already very difficult because even in Europe they're not equal countries, right? They're all different. But you've been investing for 8 years in Southeast Asia. Do you think it's changing? Do you see a trend of it moving in a certain direction? Is it getting easier or is it getting harder?
Yeah, I wouldn't say it's getting easier, but it's definitely getting more structured, because you have the playbooks now that you can use from for other companies that have done it. You have people that have actually done it. So from a talent standpoint, there's now a talent of people that have actually done all these localizations and expansions. So I won't say it's easier, but there's a much more structured, organized path towards getting there. Then that's where the governments come in, right? The governments have also stepped up in the last 5 years to be a lot more supportive to help entrepreneurs expand a bit quicker on the ground. It's very counterintuitive, like if you compare American entrepreneurs and here, like I think in this part of the world, you really do need to work with government if you want to grow quickly, and you need to get the right support to push.
Right.
I mean, Grab was very strong at really building coalitions with all the government agencies in the region, and then using them and working with them as a way.
But on that topic, by the way, do you think that whole SPAC listing in the US is meaningful for the ecosystem here? Do you think it will have impact?
I think it's something that the ecosystem needs. I don't want to be the one that shits over what Grab has done. I think they're a phenomenal company. I use their service all the time. I think the valuation could be a bit more pragmatic and realistic. But at the same time, I think what Grab has done in this part of the world is extremely unique, right? People immediately compare Grab and Uber, but I don't think it's a straightforward apples to apples comparison. The region does need Grab to do well in order to seek some level of validation. So there's a lot of people banking on Grab, not tanking, like, for example, maybe Deliveroo and stuff like that, right? But at least doing okay.
But do you see, like, because they managed to scale? I mean, it's obviously a great example of a company who just started in Malaysia and said, look, okay, let's just conquer the whole Southeast Asia, right? And they actually managed to do that. Like, do you have insights on what they did right, or am I asking questions that are like beyond our sort of access?
No, so I think in the early days, right, Grab did something really well, which is to really target the tier 1 cities in the region. So this is why I tell people, okay, the Grab versus Gojek model, right? Gojek was hyper focused on Indonesia, and they went from tier 1 all the way to tier 5 cities. So the whatever they were building, right, was it should work in Jakarta versus it should work in maybe a village in Indonesia, like Malang or one of those smaller cities. And I think the technologies and the services you need are radically different in that process. Whereas for Grab, they expanded by tier 1 city by city, Singapore, the Jakarta, the Ho Chi Minhs, the Manilas, the Bangkoks, the Kuala Lumpurs, right? And in most of these cities in the region, I won't say it's homogeneous, right? But the internet penetration is there, the usage of online payments is there, the urbanization levels of the cities is there, so the need for a Grab-like service is there. And then Grab started introducing services on top, and then started to expand into other markets. There are still a
Yep.
lot of places, in fact, in Southeast Asia that Grab doesn't operate. Most people
Yep.
don't realize that, right? They like, you go to Philippines, they operate in the Manilas, the Cebus, all the top tier 1, tier 2 cities, but a lot of the tier 3 areas, Grab doesn't even operate there.
Yeah. I don't want to drift off too far, but that's actually where in a lot of research also the opportunities lie, right? The captures, the big cities have been captured by a lot of service providers, but the rural areas are completely open still.
Yeah.
Like there's very few services that obviously it's challenging, but the majority of the people, I think, are at least 1/3 or 2/3 still live in the rural area. So if you can actually capture that, that's like a next level of success.
That's what massively Gojek did in Indonesia, right? They literally bought companies on the ground that had access to all the islands and all the rural areas, because Gojek was building like very, very deep vertical access in one country. And Indonesia has thousands of islands, right? So you need different types of technology and solutions to solve those problems. And Gojek has done that really, really well. But
so they did acquisition. They went on acquisition path. That's what you're saying.
They did a lot of acquisitions in the early days. I can probably dig it up and send it to you at some point. But they did buy like local logistic companies that were very specialized in dealing with maybe moving goods from islands to islands over smaller boats or smaller trucks, right? Those kind of things. They went heavy into things like ticketing, online ticketing. They went into entertainment services, movies, video streaming, a lot of those kind of things to really heavily tap on the local population and the local ecosystem needs.
Right. Interesting. Hey, just to take a few steps back, just now you mentioned that government support is critical in this region. Singapore is obviously a bit of a different government from maybe the other governments in the region. So I wanted to sort of like talk with you about Singapore and then maybe the rest of the region a bit more in general. What do you think is the Singapore government is doing maybe right, or maybe could be doing better, but to support this ecosystem?
Yeah. So the Singapore government has been trying to do this for, I think, 30 years now. Okay, so it actually goes way back in the early 90s, right? When their National Science Technology Board initiatives to encourage entrepreneurship. But back then it was very niche. And I think year on year, right, the government is tweaking and evolving their methods. So for context for everyone, right, in 2006, 2007, the government was actually one of the largest providers of investments in the early stage, not investment, grants to get entrepreneurs kickstarted. So a lot of the more successful entrepreneurs today probably had the opportunity to tap on those 50K grant schemes that allowed them to get the opportunities they needed to build companies. So the government was playing that role. Fast forward to today, right? I think today's role for government is a few-fold, right? One is in ensuring that there is a fair balance of talent opportunities and talent provisions for these companies. So it's a mix of providing retraining, reskilling, upskilling to maybe older people. It's a mix of balancing immigration versus supporting the local talent. And it's a mix of finding ways to attract people in very, very specific and deep sectors, maybe people who have PhDs in like cell-based food or plant-based foods, those kind of things. I think the government is heavily invested on the talent portion first. They really want to make sure the best and the brightest of the world come to Singapore.
Yeah.
The second thing is in specific industry developments. So I think the government has always, recognized that there are key industries that they want to play a big role in, and the new one is obviously food. Previously they were looking at everything from AI, machine learning, big data. Blockchain was a massive one as well. So for a period of time, Vitalik was based here. They were attracting a lot of blockchain companies to build here. Fintech has also been a big one. So that's the industry level segment where they pour money, they build sandbox environments so people can innovate without having to worry about the rules, and they ensure that they have a large amount of investment and partnership support to developing.
Right. Those. If you look at, I mean, Singapore obviously, and is the most the most powerful of this in the region, I guess. But if you had to pick another market beyond Singapore, and then maybe not think so much about the size of the market, but purely looking at from a government support perspective, what do you think is the ideal sort of second choice, or maybe your next market to move into?
If we look at it from a government support standpoint,
yeah,
I would really pick Vietnam.
Okay.
So Vietnam has a good balance of things where I feel that the government is involved enough, but not too involved, right? They're letting the market do its own thing, but the government is also ensuring that they are playing a positive role in supporting the ecosystem.
Right.
Vietnam is probably later to the game from a government support standpoint, but I feel that they are focused on the right areas. And because
Right.
Vietnam government, as you would know, is very resource tight, right? They have to be very innovative and smart in terms of the way they support entrepreneurs and give resources.
Yeah. When you make an investment decision, for a country, for a company, do you take the government sort of into account? Do you look at that? Let me give an example. We were just looking at we were looking at a company in Bangladesh the other day,
Yeah.
and we know very little about Bangladesh, and at some point we ask ourselves the question, okay, what's the government doing in this here, right? I mean, are they going to support us, or what's going to happen? Is it something you look at a lot, or you're like, as long as the founder is fine, he will find a way?
Yeah. So okay, I did have to think about this for a company I invested in India. So they're in the Ayurvedic medical space. They have like a doctor network and everything. I think that's the only company I invested in where I had to think of that a bit deeper, because when you deal with medications and all that, there's that element of whether you have the right licenses or legal documents to do these kind of things, right? I think that's the only time I talked about government. But on the pro side, right, when I looked at Just, that one made sense to me because the government was heavily backing food tech, and supporting food companies to launch here, build here, and grow here, right? So on that level, I felt that yes, the government's involvement in the space would be very, very positive.
Right.
But the thing with people that they need to be very cautious on in Singapore, right? The government moves very, very quickly. You might be the flavor of the month today, right? But a year from now, right, it might just shift, and the government support will also shift along with it. So that moves very quickly. And I always tell entrepreneurs, right, don't build your business based on the support of the government. Tap on it if it helps. If it doesn't, just focus on something.
Yeah, exactly. So that was my point. In the end of the day, it needs to be a supporting role, but you don't want to sort of rely on the government. Say, okay, because of this angle, we're going to be successful, right? It's ultimately just yeah. That's why I always believe, a good founder will always find a way, right? They even if you have to shift away from the whole country and go somewhere else. I mean, good founders do that. They are resilient enough. Look, so we talked about scaling a little bit. We talked about government support. How about exit opportunities? Let's say you do make it to your Series B, C, D. You get to a certain scale. What is your view on exit opportunities at the current moment?
Yeah, so I think the exit opportunity, it's still very challenging in this space. Okay, there's still that mentality that I can build it better than versus if I buy it. So I see exits in a few ways. Okay, if we look at capital markets, the region's capital markets are really not favorable for exits at all. Right?
Yeah.
There really is a reason why C Group, Razer, and all these guys don't bother listing in any of the regional markets. So that part is out. Okay. If we look at acquisition from corporates, I can tell you that one of my own portfolio companies is currently going through a potential M&A activity, and the way corporates value startups, the way they put a dollar value on how much they should acquire and how they should treat the founder post acquisition is still there's still a lot of room for improvement with that kind of thought process. So I don't see corporates as the ones that driving M&A behavior. The only organizations I feel, right, that will actively drive M&A behavior are the unicorns, the Travelocas, the Grabs, the Gojeks of the region, which they have, right?
Right.
But typically, right, it's very, very strategic to your core business, so it's pretty niche. And there's also that element of like, oh, I used to go to school with him, or I know these guys from before, and hence we work together, right? It's still relationship driven, not very much.
Do you feel that, I mean, we looked at a few businesses where we when they wanted to expand, we sort of asked them, like, why don't you look at partners from day one, right? Just to grow in the region and look at those partners who can help you to bring sales or give you some access. But then later on, we started to realize that these partners could be your acquisition partner from day one.
Yeah.
Right. Do you think that's a good strategy? Do you think that, as a business growing in Southeast Asia, you want to partner with people maybe just because to find that exit from the early days on already?
I think it really depends on a case by case, because
Yeah.
Southeast Asia is still a market, right, where I don't think there's enough trust that people have, right, that a partner might not screw you over and do something themselves and those kind of things. I mean, if you look at maybe Thailand, Indonesia, like there are multiple examples, right, of traditional companies that have partnered with, let's say, large foreign firms, learned from them everything, and then done their own thing locally.
Right.
I don't want to go into the details of the names, but you can see it in markets around the region, right? So for startups, it's even worse. So when you partner with an organization, there's always that notion of like, will they copy you? Will they screw you over? Or will they build it themselves and
Yeah.
invest in someone else?
When we bring it back to sort of the real angel investors, right? I mean, and the biggest group in this attending this call is an angel, our angel investors. And do you think it matters for an angel investor to worry about that company being sold, or do you think as long as there's a Series A, Series B happening, angel investors can just rely on doing secondary sales and get their exits? Like, should they really be worried about it?
I think no. I think the model is definitely changing. So in the past, right, like most founders might not be that savvy, right, to support some of their early investors who exit and all that. But I think that is slowly changing with the maturity of the founders, and they're also learning from each other, right, how to better support their early backers. So maybe years ago that might not have been the case, but today I think there's a certain level of a change in that kind of mindset. The other thing is also this. I think compared to maybe 5 years ago, right, there are a lot more players that are actually interested in secondary opportunities. So you as an angel investor in a popular company, right, you could actually be selling shares at a later. If you look at Shopback as an example, so Shopback is e-commerce platform in the region doing cashbacks related deals. There have been and there are actually ongoing secondary sales, and there are people that are willing to go through that process of bringing investors in and all that. So I don't think that was very apparent 5 years ago, but today it's definitely a lot more in the larger companies. You just have to bear in mind that these companies do have to raise a very significant amount of capital, and they need to have tier one VCs before those kind of things actually happen.
Right. So in that sense, an angel investor should look at funding opportunities, right? Not so much on can this company be sold, but can this company raise more money, not just to grow, but also for me to make an exit.
I want to add one thing. I think it's very important for angel investors, right, to look at who is the board members in the company, how involved they are with the firm, and how frequently are the founders interacting with the board. So I think unlike the US, right, at least in Southeast Asia, you don't get board members or investors actively supporting the entrepreneurs with potential, with corporate development or potential M&A activity. And I think that's an important evolution with respect to how a company, how this ecosystem evolves.
Right.
It's common to have tier one VCs that sit on the board but don't really do anything. And I think that's something that angel investors should do their due diligence about, either by asking other founders that have raised money from them, or by asking some of the LPs and all that. That's right. I think in from now onwards, that's going to be another critical layer how founders will judge investors, because money is now fairly commoditized, right? Especially that you have so many funds popping up. Most founders want to know, okay, what kind of value add do the investors bring? And I think this is something angel investors need to be mindful of.
Yeah. Thanks for that. That's great information. So getting to the end of our conversation in what we've learned from about Southeast Asia. Do you think that Southeast Asia ultimately that venture capital is going to be a lasting sort of asset class here?
Absolutely, yeah. I think venture capital definitely is. When I like was initially starting E27, right, the whole thesis was that the region has a ton of like problems and that relate to opportunities, but there were no drivers to solve those problems. Corporates were too busy building focusing on their existing businesses, and governments were too busy dealing with their problems. And it was really going to be us, right? And the catalyst to help this happen is going to be the VCs. You might have some maybe CVCs, you might have maybe hedge funds that go downstream and start doing early stage funds. I genuinely feel that it's going to be the VCs that will be driving this.
Right.
The
Interesting.
community is very powerful as well.
Yeah.
Because
Because there's nobody in that space, right? I mean,
Yeah.
ultimately VCs don't want to come down, that far and really look at, for founders really just getting started. So angel investors are critical, and to help them to get to the VC sort of stage. Yeah.
And I think Grab's spec and all the other IPOs that happen, is going to have an influx of angel investors that want to come in the space.
Yeah. Yeah, so I mean, we're super bullish on Southeast Asia, and obviously it has its challenges, as we, you and I agree upon that it's not that easy, but it is. We're still at the early days, and there's so much growth still, ahead of us that if you do it right, you can sort of tap on. Yeah. Back to my thesis, and sort of relates to what VCs do here, but do you think ultimately do you see new technologies popping up, or is it still really about we gotta serve the consumer who start to earn more money and wants products that are very popular in the US already? Like, where is it that, what do you see?
No, I definitely see new technologies popping up, right? Like my classic example is PetsNet, right? Which a lot of investors and even founders were not very privy of, but they just raised $300 million and became the new unicorn of this region. So PetsNet, for everyone's reference, does patent search, IP search, those kind of things, and they have like a global pool of clients. I think there's definitely going to be more and more organizations in sectors like healthcare, food, blockchain, that are going to be providing new services for sure. There are also going to be a lot of innovations in the fintech space, right? Southeast Asia is a very, very good space for fintech type innovations to thrive, because the consumer base is always mobile first. So even Gojek has launched a bank recently, right? And we've been talking to our own community, right? Everyone's saying that the way the onboarding works, the way the entire user experience works is completely radically different. And I don't think you can build those kind of companies in the US, because the user base is just completely unique. I think there are going to be more companies that are going to be targeting like the work from home industry, the mental health industry, and these are sectors, right, that are completely different from the US, from China. So you're going to need very specific services to tackle them here. So I'm very bullish that there's going to be new services and not simply copycats or
Interesting.
Other services.
So we're at a tipping point there, because if you go back 4 or 5 years in time, it was less about those sort of like deep tech time of like innovation, but really about like let's launch a ride hailing service, or even though those services were localized, they were still similar services as to the Western versions of them, but your food delivery platforms. And now the question is indeed really like, have we reached sort of a tipping point where we're like, okay, we've done that, moving forward, we'll need to solve deeper, more meaningful problems to sort of get further from here.
Yeah.
Right.
I mean, if you look at the challenges of urban cities in this region, everything from traffic to logistics to smart buildings to energy management and efficiency, there are like multiple billion-dollar opportunities in every one of those verticals. The entire region, right, from just for logistics alone, right, is many folds undervalued right now. If the productivity of a lot of these tier 1 cities in the region can go up, right, the value created in that process is tremendous. And the thing is this, you really cannot use a cookie cutter US solution and localize that here. It doesn't work that way. Right? A lot of the challenges that this region faces are extremely unique to them, and the market is large enough for companies to build and serve that sector. So I still feel that moving forward, right, there are many futuristic sectors, like I mentioned, right, logistics, smart city, energy, food, that are going to be extremely unique to this region, that the next wave of billion-dollar companies will be built on.
No, I mean, especially in the alternative protein space, and whatever works there in the US, what people eat might not work, in this side of the world. I'm with you there. It's a very different. Cool. Any questions? I did get 2 questions actually for you, Mohan. The first question is, when it comes to the fund space, and I guess this is referring to you having invested in a few funds, do you think there is more opportunity in the later stage or in the early stage funds when it comes to Southeast Asia? And if so, should funds be sectorial or broad-based? So, looking at funds, would you choose to go early stage, or do you think, the later stage where the opportunities are?
So I've been having a few conversations with people about this lately, and honestly, I feel that there's that, especially for new investors, the opportunity is really on the early stage side, because a lot of the good early stage funds that existed in the last 5 years have all gone on to build later stage funds. And these are the people that you want to raise money from at the later stage. But on the early stage side, there isn't a good enough quality pool of new high qualified intelligent investors that can provide support there. So if you're building a fund, I would definitely say start on the early stage side. And I think the number of companies that are coming up have actually been increasing significantly this past couple of years, simply because I think the pandemic definitely offered a lot of new opportunities and a lot of new companies to build that only startups could do, because the bigger guys was just too slow for them. And B, I think because globally, if you look at like the pace of innovation, right, and the fact that capital is quite a commodity, I think most smart people realize that it's much better to leave, raise money, and build something as opposed to continue in a larger startup or a corporate. So early stage for me. Sector, I don't think there should be a need to focus on particular sectors, but there are definitely sectors in Southeast Asia that I would say a bit more on this, maybe a bit more saturated. So the logistics sector, the e-commerce sector, those are a few of the sectors where there is a significant amount of companies that have raised a significant amount of capital that on the early stage level, you might not be the best differentiator. But there are sectors like food, right? Massive opportunities there on the early stage side. Smart city, healthcare. I think there's still a lot of opportunities in those spaces.
And I agree with you there. I mean, look, there is definitely a lot of funds popping up left and right, but it's just like there is still room for the good ones, right? And not all of them will make it to their next fund and deliver those returns. And a lot has to do, if you look at it from a fund manager perspective, with the quality and the understanding of the fund manager of the region, and regardless whether they are broad based or they're industry specific, it's really about, do they get it, right? Do they understand what they're doing very well? And so my advice to people looking at funds is to basically say, well, look, there's a lot of opportunities still, there's a lot of room, but be wary. There's also a lot of funds popping up, and not all of them are going to deliver you the returns that you might be looking at. There's a bit of a hype happening also at the same time.
I mean, to be honest, in my positioning, we do get contacted by a lot of funds that want to be profiled on E27 and everything, and every now and then you will definitely meet that guy who managed to raise money from rich people, right? And who doesn't really know what he's doing. So yes, there's a lot of money, but if there's, in terms of quality money, I think there's still a lot of room for that to grow in this model.
Agree. Another question. Let's see if we can answer this. Whether we see better returns in the ESG sort of impact startups versus, I guess, the non-ESG focused startups. It's a difficult question. Do you have an answer to this?
See, I see ESG and impact investing as a feature, right? Like on some level, I think every company needs to be mindful and start thinking about how are they contributing to the world? Are they doing it in a negative way? So if your entire company is based on the thesis of just, you are ESG and impact oriented, it's going to be a very micro niche, right, from a fundraising standpoint. And I don't think most investors are super excited or bullish by that thesis alone. But if you as an organization are building products and impact or ESG is part of your entire thought process, right, then I think it makes for a better story. I think the impact here is really less on the investment side, more on the consumer side. Because more and more, I think regionally, even in Southeast Asia, right, the consumer base is now asking for whether the work that you're doing is impactful, whether is it sustainable, and how does it impact environment and supply chains and all that. So I think the bigger focus should be on the customer side, not so much.
I have to say though, that there is obviously a bit of a hype happening in the space, right? In the whole impact space. So it could mean potentially that your startup in that space is able to raise money a little bit easier than, compared to a startup who's not in that space, purely because there is that hype of funds sort of trying to get into that. Whether you as an investor should bank on that, I'm not sure, but I do. You'll see more successes because simply there's a little bit more money flowing into that right now, and I guess from a climate sort of the whole ESG perspective, it's good. It's a good thing that people are looking at this. From a return perspective, you'll probably get slightly better returns right now, maybe. But if you look at it longer term, I'm not too sure indeed of if ESG will give you better returns. It's just something you should probably just be worried about, and maybe less about your returns.
You'll be thinking about it at some point, right?
Yeah, exactly. I have one follow-up question from the person who was also asking about the fund. In your opinion, when it comes to later stage funds, what's sort of the best country to look at? Singapore, Indonesia, or Vietnam? Do you have an opinion on this? Where are the later stage opportunities?
So to clarify, right? Is it to do later stage investments, or is it to base the fund?
In a fund, basically. Which country? Oh, I guess it's about like, to invest as a fund, or you to invest in the fund, or later stage investments. Yeah, the question is not completely clear, but maybe phrase it different. Where do we see later stage opportunities the most? Is it in Indonesia, Vietnam, or Singapore?
Okay, I think the later stage investment opportunities are definitely going to be dominated in Indonesia. So just this week alone, right, we've seen I think HaloDoc raising 80 million. There was a Robinhood competitor in Indonesia raising 60 million. And these are fairly common now in Indonesia in the last couple of years, where you have double-digit tens of millions fundraisers happening on a fairly regular basis. And Indonesia even has the investor base to do this, because there are quite a few Indonesian funds now that are solely dedicated to Indonesia's companies. Most of these
Vietnam will happen, though. I think Vietnam will happen maybe in a year or 2 or 3.
Happen. Yeah, it will. Yeah, but with Vietnam, I think there's a certain element of a culture difference, or a certain element of a too localized kind of a view that international investors might just find a bit more challenge working in. But I do think, yes, Vietnam is a huge opportunity.
It's next. It's really next, I think, also. Yeah.
GDP past Malaysia. So Vietnam is massive.
And when it comes to Singapore, I mean, obviously Singapore as a market is just too small to really look at, late stage opportunities. Obviously, their headquarters of these companies might be here, but the real offset market is going to be one of those major, Vietnam, Indonesia sort of markets. So later stage, really have to look at the region, the big markets, and ideally the markets that are a little bit more sort of evolved, further ahead. Indonesia number 1, Vietnam probably 2, and then there's a lot of developing markets sort of below there that are going to be next.
There's okay. That most people might not realize about Vietnam, but in my view, right, it's the most homogeneous country in this region. So if you go to Ho Chi Minh, if you go to Da Nang, if you go to Hanoi, right, all of them are more or less the same from a technology standpoint, from an access to internet service standpoint, because the government has done a phenomenal job building the infrastructure.
Right.
That's not
probably better than Indonesia in that sense.
Way better.
Yeah. No, Vietnam is a country to look at. I mean, that's also my personal opinion. Like it's something we should keep an eye on, because it's happening. Yeah. Okay, Mohan, I think we're getting to the end of this webinar. No more questions. I want to thank you very much for helping out here, for sharing your thoughts. Just few final notes here for the viewers and listeners. Do provide us with feedback through the channels that you might have already about what you want to see in these webinars, what we can do better. Feel free to invite other investors. We're doing this on a fairly regular basis, usually every month, but it's open to whoever's interested. Do feel free to reach out to us via WhatsApp or via email. We have several groups with people to discuss deals that we're doing and companies that are already in our portfolio. And if you just want more sort of generic updates on what's happening, follow us on LinkedIn. We did typically post everything that's happening on LinkedIn, and that's sort of the best channel to follow us. So again, thank you very much, Mohan. Again, thanks for joining. Really appreciate it. Thanks everyone for joining, and let's stay in touch.
Yeah. Thanks everyone.
All right. Have a good day.
Have a good day. Bye.
Bye bye.